You are listening to chartingwealth.com for Monday, the 20th of July, 2015. We always start with IYY, and that is where we start today. You can see that over the last 6 days, and those of you who are listening by audio, I will explain what those watching by video are seeing. You can always see the video at chartingwealth.com, also on our Facebook and Twitter feeds. Over the last 2-day candles, you can see large green candles moving up. We have drawn a 2-day trend line. We've only connected 2 of the candle bottoms. We like to have 3 or more candle bottoms on an up move or candle tops on a down move. We had a crossover between the candles on the 15th and on the 17th. And what we see is strong up movements. When I say crossover, that's a crossover between the MACD, the moving average convergence, divergence oscillator, and the signal line. We also, right after that, have a crossover, switch over from the red down box to a green up rectangle box, whatever we want to call it, of the derivative oscillator. We like the derivative oscillator just because it gives us a little confirmation, but we really pay attention to the MACD more than anything else. It is our favorite indicator, and of course, we keep it simple and straightforward here at chartingwealth.com. Now, so we've got a confirmed up move in IYY. We also, on the 4-day chart, it is interesting. We talked about this for the previous podcast that we did. We've seen a topping off here. It looks like we're somewhere around 107.14, and we've really not gone above that. The way the afternoon ended today, it looked like the market was digesting over the last day and a half or so, almost 2 days, some gains that it had made starting from the 16th through the 17th. And we have a little bit of a coming together, a converging of the MACD. We also have the derivative oscillator losing a lot of its energy. That's on the 4-day chart, still well above the 2-day trend line. So we're in a confirmed up move on both charts, but we might have a topping out occurring. Now, why does that matter? Well, we want to see the derivative. We want to see the derivative oscillator. We want to see everything on the 4-day chart roll over. And then we want to see another confirmed up move before we think about getting into any trade. You might have said, well, gosh, we've had 6 days so far of confirmed up moves. Yes, but we've had no good buy-in point at this point. So that is where we are on the total market. And again, looking at IYY, Total Market Index Fund. Now let's drop back to the 2-day chart and let's go to the S&P 500. This is another exchange-traded fund that tracks the S&P 500, Standard & Poor's 500, 500 big companies. It looks very similar to the total market because SPY represents a lot of the market. Not an exact duplicate, but very similar. 3 big candles representing 6 days of lots of up movement, crossover around the 15th. And the derivative oscillator flipped over also, so we're in a confirmed up move. Now let's branch back to the 4-hour chart and look. And again, sort of a topping off. Looks like, for the last day and a half or so, almost 2 full days, we've had the market sort of peak out and stay at about the same place. It was technically up 0.08%. Total market was down 0.04% for the day. Derivative oscillators falling off. We're still in confirmed up moves on the total market and on the SPY. Now let's look at the Qs. My favorite chart. Let's go to the 2-day first. Wow, it pushed way up through the Bollinger Band. The Bollinger Bands, of course, are volatility bands. Another mathematical equation. The tighter the Bollinger Bands get, the less volatility you have, and the bands got pretty tight starting around the 19th or so of June, pushing on into July, and wow, have they rocketed up. In fact, there's a large wick on the top of this present 2-day candle, and there was a lot of action. The bulls pushed it even higher. The bears pulled it down some to close around 112.38. That's $112.38 or so. The Qs, and in fact, is that right? Yeah, that's about where it closed today. The Qs was up 1.47 let's see, yeah, 1.47% for the day, so about 1.5%. And we had a strong up candle way outside the Bollinger Band, meaning an incredible amount of volatility, incredible amount of a push up. Had the crossover around the 15th on the MACD and a huge pop up on the derivative oscillator. And it's telling me, I'm sorry, the price closed at 113.57. So huge push up in the market today. Now, let's look at the 4-hour chart, rather, the half-day chart, and see what that tells us. Again, the Qs is going up, up, up. NASDAQ 100 going up, up, up. No topping off really here. Derivative oscillator has lost a little bit of its steam, but the MACD has powered on, so confirms strong up move in the Qs, along with strong up moves in the S&P 500 and the total market. So that's where we end on our indexes, all well above their trend lines, everything tracking for strong up movement based upon any number of things that people believe are true, because again, the market does what the market will do, and we pay attention to the charts, not the noise. Now lastly, let's range back out to our 2-day chart. And let's look at gold. Gold has continued to follow our trend line that we started drawing back on the 23rd. It's continuing to follow that, and a strong down move over the last couple of days on this 2-day chart. Gold closed the day down 1.01% at 108.65. Strong down move. Gold has pushed through the Bollinger Band in the opposite direction that we saw on the Qs on the NASDAQ 100. It is strengthening on its movement down. The derivative oscillator has gotten longer, and the MACD has widened, has diverged even further between the moving average convergence divergence line, this blue line that you see on our chart, and the red signal line. So gold continues to move down significantly. That is where we are. Confirmed down moves in gold, up moves in our 3 indexes. That is the way that we end the week as we get ready to come into the next week. So again, keep an eye out for possible buy-ins soon, maybe, on the SPY and the total market. Qs appears to continue going up. If you're in a good inverse fund in gold, good for you. If you're waiting to buy gold to go up, you probably want to consider waiting. And again, all of our advice is predicated on you trading on a type of exchange where you are doing sort of what? The equivalent of fantasy football. Again, we're not giving trading calls. We're talking about virtual trading. Once you gain the knowledge and the ability to trade on your own, of course, you can make those decisions for yourself. We're not a calling service for stock trades. We're an education service, and we appreciate you joining us for Charting Wealth every day. Hope that you follow us on Facebook and Twitter, and also now on Instagram. You can go to chartingwealth.com, sign up for our newsletter where you'll get these charts every single day. Plus, what do you get at the beginning of the week? You get the weekly review and forecast, which I'm going to record here in just a couple minutes. Thank you so much for joining us. God bless. Wish you the best in trading and investing. Take care from chartingwealth.com.